I'm pleased to report on our Q1FY23 numbers, and I'd like to start by saying that we have delivered a strong set of numbers that indicate growth across revenues, EBITDA, and profitability. To begin with, we have grown 23% at a revenue line from 1,808 crores last fiscal to 1,217 crores this fiscal. This has been on the back of strong performance by biologics, which has delivered 29% growth. The generics or small molecules business that has grown 19% this quarter, and our research services led by Syngene at 8%. Biologics again grew from 758 crores last fiscal to 977 crores this fiscal. And although it reflects a 29% growth, if we eliminate the COVID-related business that we captured last fiscal, the growth is even stronger at 46%. When you come to generics, I think the 19% growth from 486 to 580 crores demonstrates the uptick in our overall business. And of course, this has been led by a strong performance of both generic launches in the US and APIs that have been marketed this quarter. In terms of research services, again, whilst it reflects an 8% year-on-year growth from 595 to 645 crores, last fiscal did have the benefit of, again, remdesivir supplies. And if we eliminate that, the growth is more like 30% in terms of its core underlying business. Core EBITDA, which is EBITDA net of R&D and Forex and other mark-to-market losses, is up 25% at 660 crores, which also represents a very healthy margin of 31% as against 30% last year. So if you come to EBITDA, which then includes R&D and other costs, it rose 9% from 437 to 478 crores. And it reflects margins of 22%, which is a decline from last fiscal, which was at 24%. However, this fiscal, we have seen the impact of higher R&D spends, which were almost 80 crores higher than last year. And of course, we have also seen the impact of people costs, because we have taken increments and new hires this quarter, which of course we expect to normalize over the coming quarters. But this is an element of cost that has not been seen either last fiscal or in the previous sequential quarter. Now coming to R&D investments, it has grown 64% to 223 crores versus 136 crores last fiscal. Which of course is an extremely important part of our business because it shows pipeline progression, and many of these costs are on account of clinical development costs. As you know, 2 of our biosimilar molecules have made it to the clinic and are advancing in the clinic, which are ustekinumab and denosumab. And of course, Biocon also is investing a lot in ANDAs so that it keeps its generic pipeline filled. So I think overall, I think R&D is a spend that must reflect our future proofing, must reflect growth for the future, and must reflect the kind of seriousness with which we are investing to make our company truly R&D led. In terms of net profit, we grew 71% this fiscal from 84 crores to 144 crores. And of course, it could have been higher, but we have had to take certain Forex losses on account of restating an OCD investment made by one of our private equity investors in Biocon Biologics that had an overall hit of 48 crores. And if you look at all this, I think we have had a pretty decent set of numbers, but I think we need to make sure that we actually trend in a very strong growth direction in the coming quarters. A good thing is that all the pandemic challenges that we faced are behind us. And I think we're back to, sort of near normalcy. As you know, the generics business have taken certain planned shutdowns this quarter. So hopefully the next quarter and quarters beyond will capture the benefit of all the growth that they are pursuing. As far as biologics is concerned, we are anticipating inspections from US FDA for B3, for Aspart, for our bevacizumab, and hopefully we will get all those approvals by the end of this fiscal, which then sets ourselves in a very strong position to drive growth thereafter. So I really think we are here at an inflection point, which is extremely important for us to understand, because we have made certain very important capital investments, which now have to deliver for us. We have made very important R&D investments, which now need to get into the clinic and beyond. And of course, we are making very large investments in building a stronger global leadership team. The most important events that we are awaiting to close in this coming quarter are the Viatris deal and the Serum Institute deal. This is going to be mega in terms of growth, in terms of transformation, and of course, in terms of positioning us as a global leader. So I think these are very important times for us. We all must stay focused. I think these are very exciting times where I think the opportunities are enormous. And what I think we need to pride ourselves with is the fact that we have a very unique portfolio of products. We are very differentiated. And in terms of competitiveness, we certainly have competitive advantage compared to others who are vying to be in the biosimilar space and in some of the specialty generic space because of the complexity of science, manufacturing, and operations. So let's take advantage and build even greater capabilities in all that we do. Let's be more efficient. I think our digitization program is going to really make sure that we focus on being more efficient and we can execute flawlessly and we can deliver high quality at the lowest cost. I think this is what is going to set us apart and make us truly successful. So I look forward to the next quarter with even more confidence, even more resilience, and even higher growth. So with that, I'd like to end by saying that whilst we have delivered a strong year-on-year performance this quarter, I do believe that sequentially, we haven't sort of kept up with that growth momentum. I think we need to focus on greater growth momentum on a sequential basis. And I have no doubt that we are well positioned now to show both sequential and year-on-year growth, which will set us up for the future. Thank you.